Welcome to Thoughts on the Market. I'm Sarah Wolf from Morgan Stanley's U.S. Economics team.
And I'm Simeon Gutman, an equity analyst covering the U.S. hardlines, broadlines, and food retail industries.
And on this special episode of the podcast, we'll focus on back-to-school shopping trends and what they suggest for the U.S. consumer outlook for the rest of the year. It's Friday, September 1st at 10 a.m. in New York.
Sarah, back-to-school shopping is in full swing as we go into the Labor Day weekend and end of the summer. As an economist who focuses on the U.S. consumer, I know you track it closely. Why is back-to-school shopping such an important indicator in general, and what is it suggesting about the overall health of the U.S. consumer?
Back to school is a large shopping event across July and August each year, which is an event that is only as strong as the strength of the U.S. household. If households feel good about job prospects and inflation is not eating away at their buying power, you should see that reflected in back-to-school sales. If we go back to summer 2022, headline inflation was 8% going into back-to-school shopping, and there were lingering concerns about COVID disrupting school. In 2023, certain headwinds to the consumer are risks to spend. These include higher debt service costs, tighter lending standards, and the student loan moratorium expiring in October. But a still strong labor market and abating inflationary pressures that have supported a recovery in real wages should outweigh the downside risk and lead to a moderate back-to-school spending year. So what does this all mean for what we're seeing in the data? Our early read on July back-to-school shopping and in-store sales is that they're going to be weaker than the historical average. However, August matters most. If we see August sales in line with the historical average, then back-to-school sales for 2023 on a year-over-year basis would be quite a bit stronger than 2022 still, but roughly in line with the historical run rate from 2011 to 2019. This jives with our early readings from our AlphaWise Consumer Pulse survey that this year back-to-school shopping is looking stronger than last year, but it is not a blowout.
And how about end-of-year holiday spending? Is back-to-school a predictor of holiday spending trends?
Back-to-school shopping is indeed a predictor of holiday shopping trends. However, the early read-through to holiday shopping points to a holiday season that's actually weaker than 2022, but in line with the historical run rate as well. Total retail sales on a non-seasonally adjusted basis across November and December have been 8% year over year from 2011 to 2019. In 2021, the growth was 33%. And 2022 was 12%. This was due to stronger than usual demand for goods as a result of COVID and stimulus. So while the consumer remains relatively healthy and is spending more on back-to-school shopping than last year, it'll be tough to beat 2022 holiday shopping growth. The preliminary forecast for holiday shopping is to see growth in line with the historical run rate, but weaker than next year. We still get a couple more retail sales reports that are going to help us fine-tune our holiday shopping forecast. Simeon, turning it over to you. What specific trends are you observing during this back-to-school shopping season?
So far, it's mixed. On the surface, it looks like the consumer is healthy. If we look at durable goods spending, the last couple of months, we have June and now July, low 2% range. That's decent. But under the surface, it's a bit of a different story. If you look at the Q2 comps across the coverage universe, they were roughly flat. That's not a great indicator of spending. And we see a shift towards consumables and supplies and must-haves. Consumers are not prioritizing discretionary items. Big ticket items are under pressure. The companies that are growing and doing well, they look like they're taking market share. There's a shift towards value, so discount stores, dollar stores, off-price stores. And it looks like it's a story of product categories, beauty and auto parts. What we've seen specifically for back to school, July was a strong month, but there was potentially some pull forward from earlier in the season. August seems to be good, but may have slowed a little, and we'll see about September. But consumers are definitely shopping more on occasion, and it's been a little bit choppy.
These are great insights, Simeon, on how consumer behavior is slowly evolving as the macro backdrop becomes a little bit tougher. You've also highlighted electronics as one particular area that appears most at risk. What exactly does that mean and what's driving it?
So we conducted an AlphaWise survey that Morgan Stanley did about a month ago that suggests electronics have the most risk. We had a net neutral spending intention from consumers year over year. In contrast to other categories we asked about, clothing and apparel had a 21% net positive spending intention, while school supplies was also positive 12%. The largest public company in the electronics space They posted a negative 6% same-store sales number in their recent quarter, on top of a pretty big negative number the prior year. So it underscores the survey. The only caveat, and maybe a silver lining, is there is chatter about units in electronics beginning to bottom, so there could be some silver lining.
Finally, Simeon, if we were to widen the lens a bit, how have back-to-school shopping trends evolved over the last 5 to 10 years? And what is your longer-term outlook for what lies ahead in terms of potential future trends?
Drum roll, please. Not much. It doesn't seem that we've gotten a big shift in spending. So we looked back over the last 10 years at the percentage of spend that consumers have made over the July, August, and September timeframe, which captures the back-to-school season. As a percentage of retail sales, it's surprisingly consistent in the 24 to 25% range. In this kind of post-COVID era, we've seen it tick up a bit, but this makes sense because the consumer has shifted spend from services to goods. So it's run rating around 25%, but as we've seen reversion in other categories, we think this will moderate as well. So our future prediction would be consistent with the prior trend line. It doesn't seem to be trading off sales with other periods, including the holiday. The one trend we have seen is e-commerce penetration is rising in this time frame for both non-store retailers and for physical retailers who have seen a higher mix of online sales. But as far as the future goes, we don't expect a big change.
Simeon, thanks for taking the time to talk.
Great speaking with you, Sarah.
And thanks for listening. If you enjoy Thoughts on the Market, please leave us a review on Apple Podcasts and share the podcast with a friend or colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.